Hey traders, Nick Shaheen here looking at NVIDIA. They reported earnings last night and there was a party at first and then it faded. So is this the end of the path for it upside? So it's a Friday, the 17th May. It's down for 0.4%, 0.5%. It tried to go green a little bit, but the whole market was down. We woke up to oh my God, the sky is falling. But we're recovering. We'll see how we close. We still have headlines flying, so I don't blame the overall picture. So this was the candle to look at. It basically framed the short-term levels. So obviously there's a bottom at 157 and change, and there's a top at 163 and change. Let's call it 164. So from the short-term perspective, before I address all the earnings and all of that, if somebody's trading the stock, these are the two big boxes. This is the big box with the two levels to look at. Within them, there are certain levels, but this is just too short-term for me. I'm not going to go there. And you definitely don't need my help if you're doing that already. So this is important because there's the gap just before that right here to fill. They can't do that without a trigger, and the trigger would be overcoming the last few failures, and these two failures are definitely it for now, 164. So that's the short term. So what about what happened over the long term? So let's go to a daily. So it looks pretty ugly. At 290, I remember saying I remember hearing on CNBC, for example, all the experts say you have to own it. This is the one stock you have to own. You have to own, and then probably something happened with cryptocurrency or something. Suddenly it became the one to hate. And the good news is that after it fell bazillion percent, 56, 60% almost, the valuation got a lot better. So now suddenly it's no longer a frothy stock. It has more meat on the bone than froth. I'm trying to find the PE here quickly. Okay, so now the PE is 26. I know it was in the teens in the lows, so that was definitely a buy, and we traded on the long side. The technicals showed that, okay, big head and shoulder type of move. It fell to it and filled it. It rallied a lot since the last year's debacle, so 50%, 45, let's call it 40% off, and then it gave back some into the earnings, so it shed 20% into the earnings. All part of normal price action, in my opinion. But what they told us yesterday, they basically reported good numbers and good concepts. They're doing the right things in the right areas. So if technology is going to rule our world into the future, and it definitely is, this is a company I'd want to own, because we only have a handful of providers to the brains of the operation. And it used to be just video cards and stuff, but now it's got artificial intelligence, data centers, and whatever you want that has a brains. NVIDIA can be in there in one way or another. So, and if not, it will be in there. Management sounded excited, so they gave nothing to the bears to sink their teeth into. That's why they spiked overnight. It didn't hold a spike, but they did spike. The options data told us exactly what was going to happen. They priced in $12 move, and that's what was the upside of the spike. And it also said that there will be resistance at 173, and that's exactly what happened. So the short-term price action does not sway me from my obvious opinion that long-term, if the stock market is higher, this one is higher. So what do I do with it? If I own it, I hold it. If I wanted to start a position in it, this is not too bad of a way. It depends on how I do it. I can buy some stock. I don't take all of it at one point, but I can buy some stock here and hold it for the long term. If I'm looking for a trade, then I should do my homework and find the levels like I just showed you. As far as levels are concerned, okay, so this was the Christmas debacle, or last fall and Christmas debacle. I have to assume that this is support, and we'll zoom out later in time frames to verify that. So look where it is, and this is a point of interest. This from the volume profile perspective, this is about 1 year's worth of data. So those are usually support on the way down. So let's assume that this was an overkill, this was support, so there is going to be somewhere in the middle where it wants to go. I noted like 200, it's a round number, but it's really this line right here. You can see I have a trigger alert. There are other alerts here, like this one we just mentioned, this one. These are all important mini levels, but if it crosses this level, look what happens here. This is some sort of a, Apple did this a while back when it fell from 700 before split. Okay, so this is cup and handle, and if the bulls can reattack this fail level right here, it becomes an opportunity where they can shoot higher, and the next level up would be here. So the technical distance that it should travel based on this technical thing is about this much. It's equal to this. You can do your homework. That's what that's what a cup and handle looks like usually. I'm not a technician. I just know how they work. I first look left and say, okay, this might be the end target, but there will be resistance here. So from a trading perspective, that might be where I just offload. It depends on my time frame for the trade. So that would be the reason why I may expect uptime. So I can wait for the trigger and miss out $20–$30, or I can build now with a stop loss below. What does that mean? Okay, I commit for X dollars now. I'll say, you know what? But if it loses 150 or wherever, it depends on my personal preference, I'm out. So if I'm buying shares and I'm okay losing $10, then I'll put it at 149. Which, by the way, this should also be a good support level here, 145. So it all depends. Or I can start with credit put spreads. What are those? I sell risk down here and wait for time to die, because obviously these are supports. Or I can set it right at the money. It's kind of like buying stock. It's binary, because I will lose money as soon as the stock starts falling, just like of buying stocks. Or I can buy calls or debit call spreads out in time. I'm not expecting this to happen yesterday. Okay, so these are the levels. All right, so let's see if I can zoom out to a 5-year to see if we can gain better gauge. Okay, so these are weekly candles. Every candle is 1 week. Let's see if we can mark it up with some smarts. All right, here we are. That's the same point of control level that I just mentioned. That's that 144, 45 level we just mentioned, and this was the Christmas debacle, just to remark up like we did before. And this was the trigger that would take us to that box up here with resistance right here, right? So this would be ideal target. This would be R1-ish, a little bit above that. So, but overall, you can see how this level here has been in contention since wherever, a few years ago. It was resistance, and then we blew up above it, and you can argue that this was support, and then we didn't need it until here, and yeah, we fell below it, but here we are trying to hold it. So we could still lose it, and then this would become an inverse cup and handle that targets like 45 or 60. That's why I have this box down here. But what are the odds of that without the stock market crashing? So if you tell me the stock market is going to crash or correct 20–30%, yes, this is doable. But if we're doing what we're doing, and China and the US finally get to some sort of a peace, we don't need a deal, we just need to stop the headlines, this will trickle higher. And this is where you see how it will find some resistance right here, a lot of it, because this also is a level that has been in contention for a long time, and more precise so than this zone right here. This is a whole zone. So long term, this should be fine. This was too soon. It may get up there soon enough, but whoops, sorry about that. I was going to move the chart. Wrong place to do that. This was too soon. Okay, so these are my thoughts on NVIDIA. Fundamentally, it's fine. The report told us that there are no alarming things on it. So, I shouldn't panic out of it, even if it lost the greens. Now, having said that, there are better stocks that behave, better stocks in the industry, like AMD. It's not a better company, I don't think. The fundamentals right now in AMD are not as good, but they have the benefit of the doubt on Wall Street. Last year, they even did better than this one. So if this one is rising, so is AMD. So if I want to bet on NVIDIA, but I'm afraid of what it can do, here's AMD. It clearly is a better performer for the last year. It was still up for the year, even in Christmas. So if you're a betting person with smaller dollar amounts, this is a better trade. But I think the other one may be a better company, at least so far is. This one, we're thinking it's going to be. So, and I definitely would shy away from Intel. It used to be my favorite, but boy, did the management scare me of late. They bailed on the 5G just because Apple and Qualcomm did a deal or something like that, something ridiculous. So I would not touch this one. The SMA should be okay, but between of these three, NVIDIA is the better company. AMD is probably the better stock to trade. So it all depends on preference. Nick signing out.